So today is Sunday, March 8th, 2020. Today's session title is I have good news and I have bad news. We'll hit the topics. I'll go over what I'm seeing behind the scenes, and some will freak out what I'm about to tell you. Some will be like, okay, I see what he's saying now. So we'll take a balanced approach and go from there. So first of all, we're seeing a lot of W action where we test the bottom, test the high of the range, and we are now, again, Sunday night futures open at 6. It is not pretty, people, but it's stopping right at a level where I thought it would. So we'll see what happens. Again, keep an open mind either way. There is a lot of concern on the coronavirus. I'm not saying that's right or wrong, but there is a lot of concern that we have to take that seriously. Especially in the stock market. Again, take your opinions, throw them out. Price action matters. So keep that in mind. So we're going to go over some charts. We're going to have a balanced approach here. So for the last week, we basically said, hey, here's the range that I think we're going to test. And this is exactly where we've been testing. Okay. So we had a huge pounce, dipped hard to the 2850 range on the S&P 500. Okay. We tested well above that to the 3130, which was a technical level that we're like, ooh, this could be another test. Rarely do you just V up before retesting in a W formation. I'm a little surprised it went this low this fast, but overnight futures are not pretty. We'll show those, but I want to show you before. I want to show these charts so you can see the real perspective before I show you the end ugly result that is currently happening right now. So it's not pretty. But just wanted to show you again, the range is basically the 3330 to the 2855 to 2840-ish. Okay. And that's actually where we're actually trading. So we are down currently on Sunday in futures about 3%. I personally think people are going to be like, okay, this is a little overdone, but we'll see. I'm not going to make that assumption until I see price action in the morning. So the next chart, real quick, this was a different range that we were watching, basically between the 2980 and the 2980 and the 3050 or the 3130 with the 3050 being the kind of break point we were testing there. Now we are testing the lows. So it's frustrating, but it is a reality. So just keeping you updated on this stuff. Something to keep in perspective, okay? And this is going to skyrocket even more because this is not update as of Sunday. But the VIX, the fear levels are extremely high. And this is the short-term version. Now let's look a little bit even closer over a 20-year period to show you how extreme this actually is. I mean, you're talking higher than levels. Most of the serious concerns over the years, with the exception of 2018 or 2008. So we have now surpassed the end of 2018 rate increase fears by a lot. I mean, we hit 55 on Friday. Not a fun day, but we did rally into close. Kind of interesting perspective that we actually did close positive on the week. It doesn't feel good when you get this chop. You assume the worst, like, oh my gosh, this back and forth, you assume it's worse, but it was actually a positive week. So keep that in mind. But we're seeing some extremes in the VIX. Got to be real about that. We're getting close. The McClellan oscillator is lower than 2008 recession. So, I mean, we're seeing some serious fear out here. I have 25% to add. Going to see if this holds. I personally, I don't know which way it's going to go, but it's interesting that it dropped directly to the 2850 range, where it's a technical driven market right now. During dips, it can be much worse than you would assume, and that's where you got to be realistic about this environment. So don't lose your mind. We're just testing key levels, as I'm showing. Keep an even keeled mind, even keeled mindset at this point. This shows how extreme the move was in TLT, which is a 20-year Treasury bond, on Friday. Rarely do you see pounces like this, I mean, I would be really careful if you're buying into this. You can see the extreme overbought, but we'll see what happens. So I personally do think we're close to a bottom, but again, I'm going to watch price action at these key levels today. So I wanted to show you the good and bad today. Now that I've kind of gone over the reality of where we stand, here's where we currently are. Where are we at? We actually tested as low as, let's see, we actually tested as low as 28.35. That's harsh. These were all well below 4%. Again, this is Sunday night futures. Best thing that could happen is if we have red overnight, in my opinion. Hopefully some buyers come in quickly, but this is not pretty. And I want to show you the good and bad. I think that we're testing the key level, again, the 28.55. And I'll show it to you. It's a little scary how well this is kind of panned out. And since I've been showing this to you, again, the 28.55, we're just retesting the low that we had a couple weeks ago. So hang in there. I know it's frustrating, but we want to give you a real perspective. We do have 25% more to add. If we timed it perfectly, no, but a lot better than most. So hope that helps. Again, look at this. Crude oil plunging. Yields, I don't, if they go lower, I'd be a little shocked, but it could happen. This I would be really careful getting into these. So hope that helps. Want to give you a fair perspective, give you an update on what we're seeing, so you're not caught off guard tomorrow. Tomorrow is going to be absolutely nuts. Okay, we're going to test that level, the 28.50, for a while. It's not going to be a fun period until we get some potential cures or reduction in the amount of the spreading. So hang in there. We'll be okay. I'm watching closely, as you can imagine. So I appreciate you guys. Thanks again. Have a good Sunday and rest of the week. Bye.